Thanks, April, and hello everyone, and thank you for joining us today. Very quickly, just to give a bit more of an introduction on myself. I'm Vice President for our Central North American region. I moved to our Calgary office after 15.5 years, or 13.5 years with Hayes 2.5 years ago, back in July 2011. The previous 11 years I spent working in Perth in Western Australia, where I ran our oil and gas and mining and construction business. And the 2 years before that, I was in the UK. So I've seen a bit of the world with Hayes, and thoroughly enjoying my time in Canada, I have to say. Just to give you a rundown on what we're going to talk about, we'll spend about the next 30 to 35 minutes looking at some of the results, or more accurately, the trends that we found from our survey. We'll give time for questions at the end. And we're going to go over a bit of a global perspective with an overview of 2013 and some salary and benefit trends, then look at global mobility, and then move on to some more recruitment and employment trends around, specifically focused more at North America and Canada. So firstly, just a little bit about Hayes, and I appreciate that some of you may know something about Hayes and some may not. But Hayes is one of the leading global staffing and recruitment companies. We're publicly traded, and in the last year we had revenues of over $5 billion US. We work across approximately 20 specialist industries, including oil and gas, and provide permanent, temporary and contract recruitment services. We also provide MSP and RPO services, as well as having our own VMS that we provide to more than 100 clients around the world. We employ about 7,800 specialist recruitment experts in 33 countries, and last year we placed more than 50,000 people into permanent jobs and over 180,000 into temporary and contract assignments. So this survey we do in conjunction with a company called Oil and Gas Job Search. They're one of the industry's leading job sites. Their database contains well over 750,000 industry professionals and is a very good source of candidates indeed. They have more than 250,000 job applications per month to their jobs. So we highly recommend you visit their website as well, because it could be of assistance to you. And just a little bit more about the survey and how we compile it. So this is the 5th year that we've actually produced the survey. We started producing it back in 2009. As well, so there are a number of sources to gain sort of detailed salary information at a more local level around the world. There wasn't anything really getting produced that provided information at a global level and gave insight into what was going on in the different regions around the world. So our goal is to provide our clients with information regarding the trends in compensation and benefits, as well as recruitment, as they vary from region to region, as the global nature of the industry takes their businesses to different locations around the world. We also wanted to provide employees and job seekers with a guide of what they can expect in terms of compensation and benefits and so on and so forth as their career moves them around. Last year we had over 250,000 downloads of the document, so it appears that we're succeeding to some degree, although we are always trying to improve the quality of the document and the information it provides. So we'd be really pleased if you'd let us know if you have any suggestions or comments on how we could make it more valuable or relevant to you. This year we had about 24,000 respondents who represent a good cross-section of the industry, from super majors to smaller operating companies, service companies to EPCMs and equipment manufacturers, across a grand total of 53 countries. 24 disciplines are covered, including reservoir characterization, petroleum engineering, construction, subsea, project controls and HSE, to name a few. So what we do is we collect the data, we then cleanse it to eliminate obvious errors and outlying figures, and then we create the salary guide from that and really sort of pull trends from that. Obviously the oil and gas industry is a massive industry, employing hundreds of thousands of people around the world. So there's real challenges around producing a document like this, and it has some limitations, and I'd like to be honest and sort of discuss those. So what we say is the salary guide should be used as an indicator of general trends in compensation and not necessarily as a precise measure of compensation levels for any particular discipline, grade or location. There are a number of sources of sampling errors. For example, we don't correct our published salaries for changes from year to year in who responds to the survey. So changes in the seniority, the discipline, the location, so on and so forth of the survey population will impact our published salaries. And we also convert all salaries into US dollars. So changes in currency valuations around the world can have a significant impact on the results that we found. And we actually think we've, given the US economy having a reasonable year last year and the US dollar gaining in value, we've seen a bit of an impact this year. Given this, we do believe the guide is valuable in providing employers and job seekers in general a global and regional view of compensation trends. For more specific information in certain locations, I suggest you talk with our recruitment consultants who focus on specific disciplines in their more local markets to get their take on more specific figures. So I'm quickly going to have a bit of a look at a global perspective and an overview of the year that was. So while economic growth has been good in some places like the US and Germany, places like Australia, where they've had a significant collapse in their mining industry, and the EU, which has had stubbornly high unemployment in Southern Europe in particular, have still been struggling. Overall, this led to a somewhat sluggish growth in most of the world economies. We saw the price of oil remain relatively stable at around $90 to $100 a barrel, which has been favourable to support the slow growth in the world's economies, but has also led to somewhat of a cooling in the industry after several years of very rapid growth. This in turn has led to a first decrease in average salaries since we started our survey in 2009. That said, there's still a bit of a dichotomy where more highly skilled professionals are still demanding salary increases, whilst slightly lower skilled workers are facing downward pressures on their salaries. So the average salary of the people who responded to our survey this year dropped significantly from last year. However, taking into account the different demographics of the respondents and currency fluctuations, this translates to about a 1% decrease on a like-for-like basis. So it's a small decline, and you could argue relatively flat, but we do think it's been a decline. In general, high demand skills like reservoir, petroleum, subsea engineering continue to see an increase in salary, as did those in unconventional E&P. Conversely, most other disciplines realised flat or single-digit declines in their salaries. Overall, this is probably a well-needed respite in salary growth. Rapidly increasing wages have started to threaten the economic viability of projects in some markets, particularly down in Australasia. I'm going to take you on a quick tour of the world now to discuss and see what's happened in each of the core regions. So heading south to Central and South America, overall it's been a very challenging year in Central and South America, although there are some good signs of things improving. Mexico's production levels have dropped by 20% since 2002, which has actually led to the government opening its energy industry to outside investment for the first time. We should see this create a significant amount of activity in the Mexican Gulf of Mexico, if that makes sense, and to start to have a big impact on the employment market there. The Brazilian market has been dominated by the difficulties Petrobras has had, is having financing its 5-year investment plan, which at a mere $200 billion is the world's largest corporate spending program. Really, this has caused some delays in some of their deep water projects and forced them to sell some international assets. That said, the successful licensing rounds for the pre-salt this year means there should be an upswing in activity in 2014. Colombia also had a successful licensing round, but at a much more subdued level than Brazil, and exploration is a priority to boost diminishing reserves there. Both countries are trying to actually reduce their dependence on international workers by actively trying to re-attract nationals who are currently working abroad. That said, given the Brazilian government estimates they'll need an additional 250,000 professionals this decade, I would think they're going to need to be tapping into a far wider reaching talent pool than that. Moving on to Europe, again you can see the salaries softened last year. There's considerable exploration work being conducted in the North Sea, especially on the Atlantic side. Development of new technology is also keeping the EPCM consultancies busy as a wave of upgrade projects are underway on platforms and facilities in operation. London started to emerge as a financing hub for smaller startup and mid-cap E&P businesses exploring in the North Sea and also in the rest of the world. And there's been a marked increase in smaller businesses securing finance to exploit recently acquired licenses. Norway expects to record level spending, primarily offshore, although the service sector is experiencing a slowdown. We think that's because companies have become more focused on increasing cash flow. There continues to be a significant skills shortage in the UK and Norway, primarily in subsea engineering and geosciences. The British government has actually responded by relaxing immigration restrictions for oil and gas professionals in high demand, so we'll see what sort of impact that has for them next year. In general, continental Europe tends to have a surplus of well-trained and educated oil and gas professionals and acts as a net exporter of these professionals worldwide. This past year, we didn't really see any significant changes in activity, and so the supply and demand of labour has largely remained in equilibrium, possibly with the exception of Poland, where disappointing results in shale exploration led to weakening demand for those skills. Heading further east to Russia and the CIS, Russia's oil and gas industry has had a very difficult year as reduced exports to the European market in particular reduced the duties and taxes it largely relies on. There was also significant political unrest with the Ukraine, which has had an impact on a number of planned projects in the region. That said, locals enjoyed a pretty significant increase in salaries last year, mainly we think as a result of fewer expats being employed or departing to move to other more stable locations. And moving on to the Middle East, again 2013 was a relatively steady year for the Middle East, but given the number of infrastructure and field development projects that are now underway, the expectation for 2014 is for much greater activity. Obviously the Middle East heavily relies on imported workers, though there have been some government and company initiatives to increase the local labour content of the workforce, which have actually had some positive impact, and that's been supported by the demographic youth bulge in the local population. That said, we expect the increase in workforce requirements expected in the next few years will most certainly be met by workers from other regions, and we've already seen a number of the national oil companies launching big worldwide recruitment campaigns to find hundreds of engineers and technically qualified staff that we expect they're going to require in the near future, and we expect to see that to continue happening. Africa. Currently supplies approximately 12% of the world's oil, 80% of which comes from Nigeria, Libya, Algeria, Egypt and Angola. There continue to be major challenges in unlocking Africa's resource wealth. Security remains a concern. Candidates are increasingly considering their safety and how potential employers are managing security at their facilities before they even consider looking at offers, let alone accepting them. There's political uncertainty, fraud and corruption at a high level, stringent regulations and restrictions, and a general lack of infrastructure and local skills, and these all play into inhibiting the level of investment there. Nevertheless, capital investment in East and West Africa should continue as the huge potential seems to be outweighing concerns about fiscal stability, security and infrastructure. Coming on to Southeast Asia, where energy demand is expected to grow by no less than 80% by 2035 in Southeast Asia. Investment in the region has been inhibited in recent times by challenging legal and ownership issues, raising capital, territorial disputes, infrastructure and technical issues. That said, Singapore is in the process of developing its first LNG terminal, so we expect to see an increase in demand for candidates with LNG experience. Design and construction of offshore structures also remains an expanding market there, and there's a significant shortage of experienced project and construction managers in general in the market there. The manufacturing industry in Asia has also continued its stride forward, and the original equipment manufacturing sector has been an engine for growth for a number of years now. With issues of quality and reliability high on the end user's agenda, Asia has made giant strides in improving quality, and the results that we're seeing are increased orders and a wider range of products being produced. We've seen and experienced and expect to continue seeing a huge demand for sales and business development specialists, as well as product support, QA and production experts. In China, agreements are starting to be put in place to attract international capital and talent to develop their shale reserves. It's believed that they hold the world's largest technically recoverable shale gas resource, but it's at an early stage of exploration. So we'll see how that develops over the next 12 to 24 months. Moving on to Australasia, where after a number of remarkable years of investment, there's likely going to be a pause in any new major oil and gas, particularly LNG projects there, particularly as a result of North American opportunities that seem to be potentially more favourable from a standpoint of pricing and contractual terms. New Australian opportunities for LNG expansion are going to have to overcome a very high cost environment and highly valued currency or overvalued currency. In the marine sector in particular, they've seen a huge increase of 40% in wages and expenses since 2007, which has only partially been offset by rises in revenue of around 8%. Needless to say, that's raised concern about the ongoing health and competitiveness of the offshore industry there. That said, the outlook for 2014 is quite promising. There are raft of existing LNG projects progressing through construction and into commissioning. Key disciplines that will see a resurgence includes health and safety, QA, QC, specialist trades and labours, and we expect to see subsea installation, project controls and operations and maintenance remaining relatively stable for the time being. With large portions of the market experiencing a major turndown, particularly their mining industry, employers are looking to exhaust local resources before they'll consider employing any new expats, and we think that's why the salaries for the imported workers has dropped more so than the local workers. And then moving close to home to North America, we've seen a pretty flat year here. The US market has seen a decrease in onshore drilling activity, largely due to an oversupply of gas and drop in rig utilisation, again partly down to developments in directional drilling. At the same time, there's been renewed focus on the Gulf of Mexico, and these have sort of combined to create a shift in the skills requirements of the market and caused a downward pressure on salaries. The drive in the US in 2014 will be in the mid and downstream sectors, and they have a burgeoning LNG industry there. We expect to see a major increase in recruitment in these areas in 2014, and for salary growth to follow. Close to home in Canada, we saw a slight increase in local salaries and a slight decrease in imported salaries, salaries for imported workers last year. Really, we'd say this amounts to relatively flat growth, and just about what you'd expect and what was typically an ordinary year for the oil and gas industry in Canada in 2013. The transmission issues and low gas prices continue to be a problem, whilst the LNG market has started to gather a head of steam. That, coupled with the other major project announcements last year, has started to have a positive impact on the employment market to offset some of the redundancies that were also made. And finally, just to take a quick look at benefits, once again, the overall number of people receiving benefits has increased, and that's a trend that's happened 4 years on the trot. So a slight increase on 2012 of 2%, 2013 of 2%, although this change has slowed significantly on the previous 2 years. Bonuses once again ranks as the #1 benefit being offered by employers, staying steady with the 2013 figure of 42.8%. And bonuses, particularly those directly relating to performance, can be a strong motivator. We're seeing more and more companies look at the way they're structuring their bonuses to try and get greater performance out of their employees and to drive motivation. We're now going to look very briefly at a few slides around global mobility. So you can see here that the number of companies who engage expat workers or who engaged expat workers in 2013 increased last year by about 5 percentage points in Canada, whilst around the world there was a slight decrease. We think this is most likely the combined result of a number of multinational companies such as Petronas, Sasol and CNOOC moving into the market and bringing expat employees with them, coupled with the development of the LNG market, where we have a major lack of local talent and a lot of that is being imported into Canada. You can also see that the vast majority of employers expect expat levels to remain about the same in 2014, and we'll discuss that fact a little bit more in a minute. This slide shows the top 5 countries of origin of imported talent to the Canadian market over the last 3 years. I think the interesting trend here is that in 2011, over 20% of all imported talent came from the top 5 countries, whereas in 2013, less than 12% came from the top 5. Now, if you were to go and look at a number of other locations around the world, for example, Australia, where over that same time frame, between 18 and 25% of their imported workers alone came from the UK, and if you go to Dubai or the Middle East, where around 40% of their imported workers come from India, then it's significantly different. We think this really shows that the local market is being far less intentional over where they're importing talent from, and probably picking up expats that are proactively trying to move here or already have moved here, rather than specifically going to look for talent overseas. The next slide shows the percentage of the Canadian workforce that currently works overseas. You can see that typically Canada exports much less of its talent than the global average, and last year we saw a significant drop in the number of Canadians working overseas, or an increase in the number of Canadians coming home. So we think this is the result of a couple of things. Firstly, the markets have softened elsewhere in the world, so possibly Canadian expats have been demobilised and decided to come home. They could also be working in areas where there's a bit of political unrest or instability and decided to come home to Canada. Also, we think the announcement of the mega projects here last year has brought a high degree of talent home, as people seek to get good jobs on these new schemes as they're starting up. And also, why not come home to Calgary or Canada? Calgary itself has been rated in the top 5 cities in the world to live in recently, and we genuinely think that's having an impact on the amount of people that are wanting to come back and live here, realising they've got a great thing in Canada. And then here we look at the top 5 locations Canadian talent goes to. No real surprises, I don't think, to see the US as the top in 2012 and 2013, as their shale gas markets increased so significantly, nor the drop-off in numbers working in Australia. It'll be interesting to see how those numbers change over the next 12 to 24 months, especially with the US markets, shale gas industry going a little bit quieter, with rig utilisation dropping down and the challenges around the Australian market. So it'll be interesting to see what happens there next year. Next, we come on to look at a few recruitment trends and a bit of a forecast for 2014. So, industry concerns. 3 years ago, the oil and gas industry's primary concerns were economics, the environment and safety, largely due to the spill in the Gulf of Mexico, as well as the global economy in general. In 2012, the key concerns shifted heavily to skills shortages, and that has continued again in 2013, despite the slightly flat backdrop. The severity of these concerns varies by region, but there is concern pretty much across the board in all developed nations. It may not necessarily help you sleep any better at night to know that the figure in Canada is more like 42.3%, so it's considered a far more significant issue here than the average around the world. So not only is skills shortages the major concern for employers in the industry, but you can also see here that worldwide more than 70% of employers are expecting to increase their permanent headcount in 2014. In Canada, that figure is just below 70%. The general feeling is that there's more caution here, given the delays that we saw in project approvals through 2012, 2013. So we'd maybe say there's a cautious optimism here, and people are a little bit more reluctant to get too carried away with things. But the sentiment is very clear, and people are expecting things to move forward significantly in 2000, or most people are expecting things to move forward in 2014. I think this slide is a pretty good reflection of how there's cautious optimism in the Canadian market here. This chart shows the percentage of companies that hired contract workers last year rather than the number of contract workers that were hired, if that makes sense. And it rose significantly in 2013. Now, we think this is a direct reflection of the fact that employers are confident in the market and they have jobs that they need to fill, but they're not that confident in committing to permanent employees, and they want to have a far more flexible workforce. So more companies are looking to bring people on a contractual basis until they're more confident the market's going to pick up permanently. We wouldn't be at all surprised to see this trend continue in 2014. And here we have a look at a very good graphic that clearly depicts the widely discussed topic of age demographics in the Canadian oil and gas industry. You can clearly see here that around the world there's a pretty healthy volume of young workers coming into the industry. That's the dark blue bars, and you can see the amount of Generation Y that are entering the industry. Whilst in Canada, more than 70% of the workforce there is aged 40 years of age or older. Now, this isn't a new phenomenon. It's been known about for a little while, but it's clearly a very nasty looming problem, and we have to assume that the issue is there because those workers don't exist in the local markets. Our intelligence is that the youth of today are going into, I guess, industries that they perceive to be slightly sexier or interesting around mobile technologies and app development and that side of things. So it's interesting thinking back to the global mobility slides we looked at, that we're not seeing any clearer indication that companies are ramping up international recruitment to try and bolster their succession plans, yet the younger workforce clearly isn't in the local market. So to me it would make sense that international recruitment has to be part of the solution, and the longer you leave it to start doing that, then the longer it's going to take to get those people into your business. So given Gen Y seems to be such an important part of our industry, and there's a big gap in it, I thought we'd sorry, I should have turned my phone off. I thought we'd draw on some additional research that Hayes has recently done on them. We basically looked into issues surrounding their work and careers, what attracts them to a potential employer and what makes them stay. We also looked at how they relate to social media and emerging technology. Now, it's not surprising, I'd say, that our research shows that Gen Y across the globe differs from prior generations in terms of their needs and aspirations in the workplace. By and large, they look for a more engaging employee value proposition than prior generations, and value flexibility in when and where they work. However, our research also shows that Gen Y differs considerably from region to region and from country to country. For instance, while all Gen Ys want to be compensated appropriately, wealth creation is far more important to those in China than Gen Y in the UK or North America, where work-life balance and job satisfaction are equally important. Gen Y in North America are more motivated by making a difference to society than any other countries surveyed, whereas Gen Y in the UK are more motivated by interesting work and coming up with solutions, and workers in China value public recognition. So some interesting differences there. The Gen Y workforce is certainly very comfortable with social media, and as you can see here, social media is starting to play a far bigger part in job seeking. We're not only talking LinkedIn, but also Twitter, Facebook, and a variety of other social media platforms. it's becoming increasingly important for companies to have a strong online profile and brand presence that they can market through these various social media channels. This does actually take a huge effort, but it's critical to ensure you're tapping into the Gen Y workforce and you're not missing the opportunities there. Looking at ourselves, Hays has spent a huge amount of time doing this over the last couple of years. It's been a huge investment for us, but the result has been that we're now the 28th most followed company on LinkedIn, and we're really starting to reap the rewards from that in terms of the vast network of prospective candidates we have and the ability to market our brand and profile effectively. And we think it's critical for all companies that operate on a global scale to have that sort of profile. Not only is the use of social media as a recruitment tool on the up, but so is the use of mobile devices as a platform to search for jobs from. Recruiting in the digital space means reaching your audiences when and where they're available. It's becoming vital that you're able to market your company and jobs in the mobile environment to make sure you're reaching all parts of the talent pool when they are looking for work. If you look at this slide, and failure to do so could mean that in about another 12 to 24 months, you could be missing as much as 25 or 50% of or more of the job seekers that are out there. So I think this is something that we need to be thinking about now if we're not doing it already. And then just another quick look at benefits again, but on a more local scale. So you can see here that the number of employees actually receiving some sort of benefits in Canada has gone up marginally, which is great for Canadians. You can also see there are some slight differences between the average structure of benefits in Canada versus the rest of the world, with health plans topping the list, followed by bonuses. I'm going to draw on another piece of research that we did in Canada last year called the What People Want Guide. Some of you may have seen it, others may not. It was basically a study of what the key influences are when employees make the decision to either stay in a job or take a new job. One of the key things we discovered was that Canadians are very interested in the overall makeup of their comp package, and many are open to considering a decrease in base salary if there's the potential to earn more through a performance-based bonus scheme. Interestingly, we also discovered that whilst Canadians would actually move jobs for a decrease in base salary if the total comp package was right, they were far, far less likely to move for less vacation, if at all. So we thought that was very interesting indeed. And then lastly, it's good to see the confidence in the market remains strong, although I think we've become slightly more cautious in our optimism after the delays in 2012 and 2013. So it's not surprising to see that more than 70% of employees expect salaries to increase in 2014. I think we're at a position in Canada, in Calgary in particular, where we're effectively at zero unemployment. So given the clear skills shortage, the positive outlook on the industry activity, and the worsening age demographic, I think we're going to see an interesting year ahead of us, and maybe 2 years ahead of us. We wouldn't be at all surprised to see salaries start going up again. So we'll see what the year brings. So just to go into a brief summary, globally in 2013, it was a flat year, creating some downward pressure on salaries, but most employers are predicting an increase in 2014. 67% of employers in Canada plan to hire in 2014, increasing pressure on the pool of top talent. Skills shortages remain the biggest concerns for the industry, and salaries are expected to increase. There also remains a significant demographic issue in Canada that doesn't seem to really have any major solutions in place, and we can't see a huge amount of proactivity around trying to solve it. And then tackling today's hiring challenges, if you can't find all the talent you need from the local market, we think it's very, very important to be intentional on where you are trying to attract talent from. Focus campaigns definitely bring greater success than generic campaigns, and we think you should think strongly about this. You definitely have to be competitive on base salary, but remember, only one company can pay the most, and we truly believe that you need to think about total compensation and benefits packages and view how that varies between Gen Y and the older generations. Tailor your recruitment plans to your target audiences. What motivates Gen Y doesn't necessarily motivate other demographics, and get your employee value proposition clear for each group, and think about retention just as much as you do attraction. They're both as important as each other. And then consider the channels and the tools your target audience uses to find jobs. When they're looking, can they actually find you there? And that ends the summary. So thank you very much for listening. If you want a copy of the guide and you don't have one at the moment, then you can request a copy by emailing me at my email address there, jim.fearon@hayes.com, or for further information you can visit our website, which is outlined there. So now we're going to have a brief 5 or 10 minutes to see if there's any questions. Bear with me. Yeah, so here's one. You mentioned that LNG projects in Australasia are further along than those in Canada. Do you think there is an opportunity to source from there for Canadian projects that are less mature, or will we continue to compete for skilled workers for the foreseeable future? And I think that there's a good answer to that. The vast majority of LNG projects in Australia, there's been a huge wave of them over the last 10 years, but the vast majority of them are now entering construction and commissioning phases. There are a couple that are slightly earlier in the piece. So I think the types of people we're looking for in Canada at the moment are in rich supply in Australia in particular. That said, they get paid significantly more there, and so the idea of attracting them to come here might be slightly challenging, but I think once you put the entire opportunity together for them, then you probably will be able to attract them, and there will be a very rich pool of good people there. The newer schemes that are starting in Australia are a bit more specialist in technology, and so they're more around the floating LNG markets. So I think the new ones there are actually going to require newer skills that they're going to have to import from other places in the world. So I'd say yes, there's a talent pool there to tap into if you're proactive, but at the same time I'd say there are other developing LNG markets in the world, the US in particular, and so there's going to be competition, and I mentioned Singapore earlier, so there's going to be competition. So I think you've got to get on the front foot and take advantage of it. So that's what I'd say about that. And I've got one other question here. Why do you think Canadian companies hire less contractors than the global average? I actually think it's a relatively simple answer, and we see exactly the same trend in the US. And the simple answer is that I think that there's a strong desire to take advantage of the health benefits that are on offer, and the other benefits, but largely the health benefits that typically companies offer in North America, which are offered less in other parts around the world. So I think that's one of the keys, and also culturally, I think people like to belong to like a company more so here. But I think it's mainly the benefits that's the key answer there. And that's the only two questions I've got. So I thank you very much for attending. If there's any other questions, please feel free to email them through to me, or even give me a call, and I'd be happy to talk them through to you. Thank you very much. Bye, everyone.